Hey traders, Raghee here, and in this update, I thought I would stick with Tesla. We've been talking about Tesla on and off for a couple weeks now, and rather than just sort of throw an idea out there and not follow up with it, I thought, you know what? Let me walk you all through, as often as I do see you here in these free updates, and walk you through what's happening with Tesla now, what are the patterns that I'm looking for, and where my position sits. Now, earlier today, as Tesla was moving down towards 266, my position was taken on some, as we call it, heat. This is the unrealized loss in a position. We all need to have a certain tolerance for heat, but that tolerance cannot exceed our allowable risk on the trade. The maximum allowable risk, and this is market money math for me, this is all about position sizing and risk management. My allowable risk for a trade is 5% risk to my account. 5% risk to my account. In other words, this is the way I think about it, all right? If I have 9 positions at most, right, barring gaps, which is an enemy to any trader with an overnight position, if everything just goes absolutely sideways, I have the ability to cut my losses at about 45%, maybe 50%. Gang, 50% down, and to have 9 losses in a row or 9 stop outs, I can't actually tell you the last time that happened. I've had 4 or 5 in a row, right? That does happen. But 9 in a row is unusual, but I'm thinking about sort of the worst case scenario. Risk of ruin. Risk of ruin in an account is down 50%. If you're ever down 50% in your account, you've got to stop. Stop what you're doing. Don't just tap the brakes, step on the brakes. Ask yourself, what kind of positions am I putting on? What is the sizing of those positions? What's the point of validity? What's my stop loss, right? All right, I mention all that because, well, without that context, my taking heat here may not make a lot of sense. The fact that we did manage to rally up back towards that 200 is great. The fact that my allowable risk threshold was not met, also good. But here's the thing. There's also another way to do this, and this is what I really want to dive into in this video. Please feel free to leave comments, or Rog, could you break down this symbol that way with your tools and with these patterns? Hey, if you have a request for a symbol, my only request for your request is make sure it's a liquid name. I don't trade meme stocks. I don't trade stocks that don't have a liquid options chain, so make sure there's some liquidity. But yeah, put your request down below and we'll make that either the topic for charts and coffee in the morning at 9 a.m. or for another one of these breakdown videos, okay? All right, so here's the thing. There's a pattern that I've been using for a long time called a minor low and minor high. The minor low is the one we're going to talk about here today. A minor low is a lower low that is surrounded by 2 higher lows. So you have a lower low surrounded by a higher low. That means the candle that could be the one that gives us indication as to whether Tesla is ready to resume a move higher is going to happen tomorrow potentially. And what that candle would essentially look like would be, it can't be a lower low that breaks the minor low pattern. So it's got to be a candle that has a higher low. And if it's the kind of candle that's going to have a breakout, it needs to take out the high from today. So the pattern looks like, moving lower, moving lower, moving lower, right? Lower low, right? Surrounded by 2 higher lows, yes? And then taking out the resistance of this candle right here. That's how, and we have yet to see that. We have yet to see a lower low surrounded by 2 higher lows and then the resistance of that lower low broken. That's a minor low. Learn that pattern. You're going to learn to love it. It works in any kind of market. It truly does. I mean, I can show you a bunch of minor highs here, right? You can see here, minor high, minor high. Here's another minor high. Here's a minor low, right? This is what this arrow here is part of my Darvas 3.0. And Darvas 3.0 has this built-in pattern. identified. That's what this arrow is. It's not a reversal. It's not a crystal ball of this is the low. It's, hey, this minor low pattern is beginning to develop. I hope that helps. Think about that. If we're going to rally up through today's high on Tesla, which is sitting at 277.58, that is a step in the right direction. Hope that helps. If you have any questions on minor lows, you have any requests for symbols, come join us for Charts and Coffee, Monday through Friday, 9 to 9:20. That is the simpler pre-game show, morning brew. Looking forward to seeing you there. Thanks as always for watching these videos. I hope the ongoing discussion of Tesla helps make sense of how someone manages candle after candle post-split. And I know this is funny to talk about in a futures trading video, but realize if this pattern is happening in corn or soybeans or bonds, doesn't matter. And remember, Tesla is heavily weighted in the NASDAQ and in the S&P. All right, gang, minor lows, learn them. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.